Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you all having an absolutely fantastic start to your day. In today's video, we are doing a comprehensive and complete macro and short-term analysis, diving into the weekly charts, the daily charts, and even the short-term charts, discussing the recent correction back under the critical level of support at 106.4 thousand. Will Bitcoin continue toward the downside from here, or are we going to see a reversal? We'll also be taking a look at the macro implications of this move and whether or not it is likely going to sustain. And finally, we'll be discussing the total cryptocurrency and total altcoin market caps, as both of these charts are showing very interesting price movements. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure, raw TA. If that is the kind of content you are interested in, you can also join us on Telegram. That is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in joining our VIP channel, you can do that by clicking the pinned comment of the free channel, contacting our admin by clicking this name, checking out our 50+ month trading track record, or even watching a 10-minute video showing you exactly what the VIP channel is, how it works, and what you'll get access to. Go ahead and check it out. Let's jump into the content. So as we can see, guys, over the past 24 hours, we have seen a bit of a small pullback here for Bitcoin. And we discussed in our Telegram channel yesterday, we mentioned that the key level in which the buyers needed to sustain the price above was that 50 EMA. And we've stated a loss of the 50 EMA will indicate the absorption has failed and the sellers are back in control. And that is exactly what we saw. We saw the 50 EMA break toward the downside, indicating that that absorption, which was developing here on the RSI, which is simply lower lows on the RSI and higher lows on the price action, did not continue, suggesting that the buyers were unable to sustain the price at these prices, which facilitated this mean reversion back towards that 200 moving average and that 4-hourly POC, a level of support we are currently retesting. A critical level at a matter of fact. We're discussing why this level is important, what it potentially means for the macro, and much more. Let's jump into our market data to start with. 24-hour volume and 24-hour liquidations. Let's take a look at how all of this is looking. Volume is down 8.3% at 186 billion, so not massively high for the week, but not incredibly low either. Looking at the liquidations, we are up 16.7% at 242 million over here. The majority of those liquidations, around 200 million of those, actually coming from long positions, as of course we did see that pullback for the price action. Moving over to the DXY is continuing toward the downside. Again, we are still expecting 92 to 93 as that macro target. If we take a look at how far we are from that, we're down about 3.76% of the 7% correction. So around about halfway through, a little bit over halfway through towards that macro target we've set out a couple months ago. We are still expecting 92 to 93 on the macro scale. Again, if interest rates do begin to drop and they drop aggressively, we will very likely see the DXY continue toward the downside. If we do see global conflicts continue to escalate, or if we do see any sort of uncertainty surrounding the tariff news, well, then we could see the DXY push back upwards. But assuming all of that goes smoothly, meaning we don't see any more uncertainty, we don't see any more conflicts, we don't see any more indecision surrounding the tariffs, then we will likely see the DXY continue downward. Looking at the S&P 500, the S&P 500 is still looking fantastic. As we mentioned already, we have now facilitated a weekly close above the prior weekly range high, which is the highest weekly close we've ever seen for the S&P 500. If you've been following the channel, you would know, guys, we pretty much called that absolutely perfectly. If I scroll back to a Telegram channel just for a little bit and find this post over here, we told you we were expecting a rally back into those highs from that 5,000 low. Again, we saw that play out absolutely perfectly. At the moment, we are still bullish on the S&P 500. We are still expecting the price to continue. We're looking at whole numbers, 6,300, 6,400, etc. as psychological levels. Other than that, we are watching and waiting and seeing how the price develops. So we're playing essentially a level by level game. The overall expectation is that while we remain above the prior break of structure, we are going to be bullish. So provided we've sustained above around $6,167, we are looking for continuations upward. If we actually drop back below this region, it would signify the potential beginning of a correction for the market. So all in all, looking pretty good. That is it, guys. Let's jump into Bitcoin. Now, before we get into our Bitcoin analysis, make sure to go ahead and sign up to the exchanges down below. If you're looking for a new exchange, there's no better place to be. BitUnix, BingX, and BitGet. You can get access to those exchanges with links below, getting access to 15% of all your trading fees for life, including up to 45% of all your trading fees based on your trading volume. You'll also enter all of our exclusive campaigns on our channel. We recently just did a campaign where we gave over 100,000 US dollars away through rewards, through trading bonuses, through prize pools, etc., etc. We had 10 winners of that. All of that was posted here in our Telegram channel. If you have not seen an update and you can see you are a winner as per this picture here, you'll get your cash, well, your USDT deposited directly into your account in the next 14 days, and that is the amount one per person or per user ID. So congratulations to everyone there. Again, sign up with links down below. You'll support me in making this content. You'll support yourself. And of course, guys, you'll get access to all these bonuses. Go ahead and check it out. Let's jump into the video. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, guys, let's get right back into the video. So a bit of an extended explanation there about our promotions. Again, those promotions, those campaigns we run, those exclusive bonuses you'll get access to just by being a part of our community. It is insane the kind of stuff we did. I mean, we gave away, what was it, 84,000 US dollars in bonuses there and $26,000 prize pools, including Apple Watches, iPhones, insane stuff. Again, heaps of bonuses. Check it out. Let's jump into the analysis. So, Bitcoin, guys, a lot is happening on the charts. And I think the most important thing that has occurred over the last 24 hours, the last 2 days, is that we've dropped back below that $106,000 support. Now, we know already the $106,000 support is essentially the level of support which needed to facilitate a bounce from, to facilitate a move back to 110. So as we can see over here, we broke through 106. We came back to retest it. We came back up into these prior levels of resistance around 108, 109,000. And we rejected from that region, pushing back towards a 200 moving average. Now, from a short-term perspective, we'll be discussing this, but let's start on what this means for the macro. So this does open up the potential for what we would consider to be a lower high developing on the weekly. So similar to what we saw here, where we had this high, we came back down, we rallied, we had a lower high. Often lower highs can initiate the start of downtrends. So we do run the risk here of a downtrend still as a consequence to a lower high printing. Now, as we know already, the 62.09 on the RSI failed. It did not facilitate a correction. That means we have seen 8 out of the last 10 times over the last 10 years facilitate corrections of 10% or greater, and 2 out of the 10 times not facilitate a correction of 10% or greater. So it didn't fail, it just didn't meet the statistical probabilities as assumed based on the 10 years of data. So we didn't see that play out. Nevertheless, when we're looking at the macro charts, we still have some weakness here, and we have still got some levels we need to break out of. And as we mentioned at the start of this week, we mentioned, yes, we saw a fantastic rally for Bitcoin. Yes, it is looking good. Yes, we have some amazing things going on that could facilitate rallies into new highs. But we're not out of the woods yet, and that still remains a fact. We are not out of the woods yet. To be fully out of the woods, to fully avoid a potential correction, we need to see a positive momentum shift on the RSI, and we need to see the weekly level break. So when we're looking at the RSI, we've got this downtrend here on the RSI. You can still see we are trending downwards. We are underneath this, representing overall downtrending momentum, essentially extrapolating that to what we would consider exhaustion. So we are seeing weakness here still on the higher time frames. If we're looking at the week-to-week basis over here, this range, we can see we've got our weekly high, 108.8k, and we have created a lower high here at 108.3k. So if this weekly candle closes red, there is a chance this will mark a lower high on the weekly, which could develop, we're not saying it is, but it could develop into a downtrend, something to consider. So the weekly chart here is not looking fantastic while the price sits underneath this weekly high. So let's talk about the short term now. We'll come back to this in a second. So in terms of the short term price action, for Bitcoin to trigger that next major leg upwards, for us to see the rally past 110, for us to see 115, 120,000, for us to facilitate what could be considered based on the 4-year cycle. Now, I'm not saying I believe the 4-year cycle will play out. I'm simply objectively analyzing this chart and just telling you what is suggesting. The 4-year cycle does suggest we could see another leg toward the upside. But for us to actually have that leg upwards begin, we can't just have the 4-year cycle, right? The 4-year cycle is not a catalyst for the price to move. We need to see actual catalysts occur, whether it be economic, whether it be policy, whether it be geopolitical, whether it be industry specific, or whether it just be the price breaking through key psychological levels or resistance barriers, which will facilitate large amounts of volume and liquidity entering the market, which can push the price upwards into low historical resistance ranges and facilitate massive volatile moves in the upward direction. So whatever happens, the 4-year cycle does suggest to us there's a chance that we do see another leg upwards. Based on the 4-year cycle, there are 2 potential top dates. The traditional top date is October 6th, 2025, based on the 1064 bar theory. And then if we look at the diminishing cycle theory, which is a theory I've not made up, I can't take credit for this, not because I didn't find it or talk about it, simply because it is already there in the data. It is already there. Someone just had to come in and take a look at it. But the 2-bar theory suggests that the cycle has been diminishing by 2 bars, which is 2 months each cycle. We've seen that consecutively from the first, second, and third cycle now, which could presume a top date of the first week of August. So that is about 5 weeks from now. So that means there is still room for another leg upwards. But for us to see that leg upwards from a technical and a structural perspective, so that is what matters that we look at it here in the charts, we need to see 2 things. Number one, we need to see the price break through this weekly downtrend represented by rejections from this weekly level. Again, we can see in both instances when we retested this level, we saw weakening positive momentum occur at those points. And if we look at the RSI, we also had breakdowns on the RSI. So drawing in these RSI uptrends, there's uptrend number 1, this is on the 4-hour, uptrend number 2. In both instances, we had breakdowns of the RSI trend line in conjunction with positive momentum, or should I say weakening positive momentum flashes on our indicator, suggestive of potential exhaustion and overextension in the price, which will likely result in corrections. This is the trend we need to break to facilitate a move to 110, and we know 110 is the level we need to break to get out of this macro consolidation range we have been within since essentially the beginning of May. If we take a measured move of this macro consolidation and apply that toward the upside, it gives us a target of well above 115,000. And again, if we look at this move and we apply the expectation, which is a potential 5-week top, that would kind of line up within the realm of possibility for that. So the next leg up could very well be the leg that occurs if this range breaks toward the upside, which could take us potentially just under 120,000 US dollars as a maximum price target. Something to consider. But when we're looking at the macro again, guys, by facilitating the break of this downtrend, by facilitating a move to 110, we will of course invalidate the risk of, number one, the bearish divergence continuing, meaning the RSI will break upwards, and number two, the risk of this lower high printing, which could mark the potential beginning of a steeper reversal. Both of those things will be invalidated if we do see the price continue upwards. So what will it take for Bitcoin to continue upwards from here? And what I want to do actually to make this a little bit more simple, I'm going to delete everything on this chart because some of these levels here are beginning to be a little more confusing. We're just going to draw in a few very important levels. We've got our downtrend, okay? We've got our $110,000 level of resistance. We're going to mark that out by a horizontal. Actually, we don't even need to mark that out horizontal. We've got the liquidity zone marking that out, the strong high over here. And then we're going to be looking at our moving averages and we're going to be watching our VRPV. So the levels we are watching are very simple. At the moment, we are retesting a critical level of support. And that is not because we are retesting the 200 moving average. That is because we are entering this large mountain of volume here on the visible range volume profile, suggestive that the price points between 102,400 into around 105,800 is an area of massive historical trading volume, and suggestive that there are going to be, well, the price is going to see a reduction in overall volatility and thus potentially find support in this region. If we see a break of 102,000, that is our bearish trigger. If we see the price lose this level, we then see a steep correction for Bitcoin sub 100,000. Until we see that, we are going to be expecting potential reversals developing from this region, which could facilitate the continuation back to this weekly downtrend and thus continuing upwards. If we are looking at the immediate price action, of course, the 200 moving average is going to act as a trigger. It lines with the POC, the point of control. Losing this level could result in a correction back to 102,000. We are watching this level to hold as a temporary support. If we are able to sustain above the POC and the 200 moving average as a temporary support, moving to the hourly chart, we could see the downtrend we have been in since the rejection at this 108k level eventually break toward the upside. Again, as you can see, represented by our horizontal levels here, the POC sitting just underneath the 200 moving average, the 200 moving average sitting just above a major area of liquidity, and the major area of liquidity marked out by this, we'll draw it out as this gray rectangular box. So worst case scenario for Bitcoin, we see a liquidity grab into this region, and we see a break of the trend line facilitating a continuation upwards. This would be worst case, but also best case scenario, right? Because a break of this trend line would indicate that the downtrend we have been in since the rejection is over, and the market is ready for a rally back toward the upside. So for the short term to be quote unquote bullish again, for us to expect a move to this weekly downtrend and thus a invalidation of these bearish triggers and a potential continuation through the range high, first and foremost, we need to see Bitcoin break out of this short-term downtrend. The worst case scenario for Bitcoin, we flash crash into our liquidity zone, we retest it as resistance, and we continue toward the downside. We're looking back at that $102,000 level as a potential support target. That is it, guys. So, important level in the short term, 105 to 104.5. Important level of liquidity. We lose that level, we will likely see a correction back into 102,000, which is marked out as that low level on the VRPV. That VRPV gap over here begins to strengthen as we drop below 102. So we run the risk of flash corrections or bearish corrections below 102,000. Provided we remain above 104.5 to 105,000, we need to break that short-term downtrend we just discussed to then see a continuation back into that weekly downtrend. And if we do see that, we will likely be retesting this weekly downtrend from a position of strength as the RSI may be breaking through this weekly trend line, which could facilitate a continuation to 110 and above. Now, all of this goes to say, again, we are still not out of the woods. If the price action does come down, we do run the risk of correction still, but we're looking at the macro charts. The macro charts are technically in a bull run while we remain above the 50 EMA and the Gaussian channel upper band. So only upon the loss of these levels here do we enter a bear market, okay, from a traditional sense. When we're looking at the 4-year cycle, the 4-year cycle is indicative that there is a chance we see this next leg upwards. Whether or not it will mark the end of the cycle and the top is completely up to speculation, and there's zero way we can say for sure until it has happened post-tense, so until after the fact essentially, right? There is a chance we invalidate the 4-year cycle and just continue upwards. There is a chance the 4-year cycle breaks, and it is more likely than not the 4-year cycle will break at some point. The question is, will it be this time? Will it accurately predict the top? The answer to that is it is impossible to say for sure until after the fact. Let's move over to the total cryptocurrency market cap. Now, there are some bad signs here on the total cryptocurrency market cap I am a little bit worried about. That is going to be the fact that we were unable to sustain this positive momentum shift. We had the failure to the break toward the upward break. This is not a good sign. It's indicative that the sellers really have jumped back in over here, and we still have the same pattern. These lower highs printing on the daily chart. Again, with these lower lows, we have a very clear downtrend here. It is somewhat of a downward channel formation, not precisely right. If we draw a downward channel in, we can see we haven't really precisely got a downward channel. If we match up the candle bodies to the candle bodies, we don't even have a downward channel. Again, we need to account for these wicks because, again, on some time frame, wicks are still relevant points of price action. So it's not exactly a downward channel, but when we're looking at, again, the highs, and we have our lows, our lower lows, we do have this laddering downward pattern, which is, again, a bearish pattern, but again, if we do break through, that is going to be indicative that the trend has ended and reversed. So for the total cryptocurrency market cap to become bullish, and thus for us to massively shift our expectations for Bitcoin to continue aggressively upwards, we need to see this pattern of lower highs break. But if we continue to make lower lows, we can continue to ladder down. If we see a break of one of these lower highs, that is going to be the sign that the market is ready to continue toward the upside. And the same goes with the total altcoin market cap. Thank you for tuning in, guys. Have a fantastic rest of your day. I'll catch you all in tomorrow's video. Can't wait to see you then, and bye.